Hello traders, today is the 28th of January 2013 and the time in London is 12 minutes past 10 p.m. In New York 12 minutes past 5 p.m. The title of this video is 5 steps to avoid trading mistake. 5 steps to avoid trading mistakes. At the end of this video, one will be able to improve the ability to trade and to avoid trading mistakes. The first thing that we want to do if you want to avoid trading mistake is to review all trades at the end of the day. So now New York is closed, we can look at our trades, what has happened, why we have a losing trade, or why the trend was successful. We want to know why the trend was successful. Maybe we will learn something from it, all right? And also, if you have a losing trend, we want to know why. One of my strengths is that when I was losing before, every trade that was a losing trade, I will look at it, I will check it, I will review it until I understand what was happening, It does not matter. Sometimes you may look and you may not understand. If you have somebody you can ask, especially TST trader, you can ask me. Or if you do not have anybody, you can also, go to Google and Google that information, to see what you can see, because there are videos on YouTube and also, article written that you can read, So very important to review all the trade, losing and winning trade. Sometimes you'll be surprised. A losing trade can reveal something very important to you. So maybe you lose a big money and you are emotional about it, blah, blah, blah. And then you calm down a bit and then you go back to the computer, alone, and you are looking at the chart. Try to see again, is there anything I should have done that I haven't done, Have I missed something, Have I failed to draw the trend line? Have I made my decision on a single time frame? Because we shouldn't make a decision on a single time frame. Why the trade has failed? All right, maybe you see a cycle, you enter the cycle, and the cycle has failed. Was the price looking for a better support level? Was a trend line being broken on a higher time frame? Which I'm going to show you now for the Euro USD. Something interesting today has happened. So these are the questions you ask to review the trend. So we are looking at the S&P 500 now. Today, 28 right here of January 2013. Review this trend. As you can see, on Monday we must draw the high of last week, the low of last week, the median line of last week, and the high of last Friday, the low of last Friday, which I cannot see here. The low of Friday is not visible here for me. Never mind. The low of last Friday is this one here. The white line here normally should be in turquoise, moment please. Waiting for my computer to respond. Should be in turquoise. I leave it white here. That's the one. That's the low of last Friday. Let's double check that. These are the line that I draw when I was posting video last time. Last Friday, you can see this is the candle for last Friday. You see the high is equal to the high of last week, and this is the low exactly there. Everything is perfectly okay. We go back to the hourly chart. As you can see, we have our lines ready. So the high of last Friday, the low of last Friday, and the median line of last Friday, that's the red one here. We want to make our decision around key levels. So on the 28th, I'm going to put a vertical line down on the hourly chart. Moment please. Vertical line right here to show you today's section. So I'm going to put it in blue. That's the vertical line, the blue vertical line. That's today. So what the price has done today, look at it, this section here on the hourly chart. Market opens, the price will dip below. That's what we want. We want it to dip below a key level and then to go back above it and to give us the first higher low. You see here? It dip below the median line of last Friday. This is the red line here. It dip below it. All right. And then went back above it to find a support. As the price going up, the price looking for a better, resistance level. So we know our resistance level, that's the high of last Friday. We will expect the price to try to retest. Very often the price will try to retest the high or retest the low or retest the median line of the last day or last week, okay? So you can see here deep below the median line, which is nice, and then return it back above. So when it deep in below it, don't sell it straight away. Just watch it. Wait for, because the market just opened, wait for the hourly, one of the hourly candle to close and monitor what's happening. So it was boom, 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 down, okay? Everybody says going down, and you know this level. So if you were selling, all right, you know there is a key level here, you will take some profit also. I will take profit here. If I want to sell it again, I'll wait. It goes below it. I want it to come back and retest it. If it fails to go above it, and I receive a signal to sell, then I will sell it. I will always take profit like this. Come down, I'll take my profit, I don't worry. Doesn't matter whether I miss a chance. I care about making an excellent decision, okay? That's the most important thing. I want to sell, I know how to sell. If it goes below it, I'm not going to chase it. Wait for it to come back and retest this level. It's a very important level. Professional would like to retest it. As you can see, as it's trying to come back up, see, it went above it. Okay, so the resistance today was, okay, the high of last Friday and last week. It's exactly the same like last Friday, you see. It's a key level, you see. It's just stuck here, and it's rolling again. The next thing that I say to traders, you see between two lines, two important levels. Do not forget the median line, which I prefer to call it the middle line, not to create too much confusion. So the middle line between the blue and the red one, okay, somewhere here, okay. So you see this candle, okay, it's not by mistake, it's like this, you see. You pull it down below that median line, you see, which is somewhere here, and went back again to retest the top here, final resistance. It's just a kind of consolidation today, all right? So, but this is on the hourly chart. Reviewing our trades, let's go on, move on. This is the S&P 500 on the hourly chart. Okay, you can see the channel that I draw this weekend. You see the bigger channel like this. You see this channel, and the prior was telling you that it was hanging on top like this, you see? That's why we have the choppy, you see? Prior was retesting. Can you see the channel now? Okay, let's color it, okay. I'm running out of ocean now. I'll put in green, okay, the channel that I put on the hourly chart last time. Okay, color in green. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TST traders, okay? So here we see, okay, this channel, that's what we are talking about. So the price was, you see today, was just hanging on top, you see, playing around, the below, blah, blah, blah. Okay, we will see whether it will return above the green, okay, line here. All right, but watch this level here. If we switch, for instance, okay, let's go to the 50-minute chart, because a lot of traders it's a very crowded time frame. Let's see on the 50-minute chart. So you can see on the 50-minute chart, this is a 50-minute chart, roll it down below, you see, here, the median line of last Friday. Run fast, okay. If you want to take it like this is quite bullish, you see. Those who understand the language of the price, candlestick pattern, see. Went down, strong bearish pressure down. Watch the tail. The tail is telling us support level here. See, price went down to this level and closed up above it. You see this candle here? It's also bullish, okay? So if you want to gamble it, which I don't like, sometimes the price can roll it back down. If you want to gamble it, you know, you are taking a very tiny risk. Stop loss, okay? Below the tail or somewhere here. It's up to you, according to your risk tolerance. But what I say to traders, which has happened today, which is nice here, you see, you want it to dip below a key level. If you want to buy, dip below, which is testing whether there are sellers still here. As it's going up, we are watching whether it's going to find a resistance here. Here it fell, it went back above it bullishly. So we know that bulls are here, people are buying here. So X is a psychological price level for last Friday. All I will say to myself, price, give me the first higher low, which is here. This is the best place to enter. It's up to you. I'm not telling you how you trade. This is what I believe, the low risk entry point. You take it again, next resistance level, resistance, 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 resistance. You may give it a chance and sell it also. See? So you see here, you see the green line, the channel that you see, some traders know this line, and they watch it. They took profit here. That's why you have this green here. Okay, they see it coming down here, the trend line, they took their profit, okay? So draw line, draw channels, as I say to traders, if you are trading, you want to know which channel you are in and what is happening. The price moving from one support level to a resistance level in a rising channel. Here the channel is rising, but we are on the edge of it. Okay, I will be happy to take this one, but I know there are resistance here. You see? Resistance, 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 resistance. All right? So always find a channel and know the key levels. So today, these levels has been useful to us to make excellent decisions. So you see that this, you smile, you see what George has said, first higher low. Here, not bad, okay? It was choppy one, okay? Next, so if you had a losing trade, at the end of the day like this, you will come and open the chart and say to yourself, what have I missed? Okay, even from resistance, sometimes you may make a mistake, you may have a losing trade, but it's not because, okay, your decision were wrong, but the market went against you. Some trader can trade against you, or crazy trader trade against you. Market went against you, it happened. But you will look and say, all right, my decision were not bad. It was not a wrong decision, but the market went against me. All right. Okay, it happens sometimes. But if you made a mistake, for instance, you were buying a declining channel, you will notice straight away that I made a mistake. Or suppose you buy right here below this key level, and they bring you down. And you buy again here, it brings you down. You'll notice that, okay, in fact, I should allow the price to go above the resistance level, retest it, and turn around and go up. You may say to yourself, I bought it in the wrong place. I was not patient, or I did not wait for the candle to close. You see this trend line, this point where my cursor is, and this point allow me to draw this white trend line. You see, exactly the same point again, the price coming to. So this is a good place, though I was not paying attention to that when I was talking to you first. I was talking to you about the fact that the price did below the key level, went above it, and I'm waiting for my first higher low. But somebody else who is just drawing lines, join this point, and this point will wait for the price to retest the bullish trend line. It's a tricky one because we are between the green and the white. So you will be watching it carefully, okay? It's a bit tricky. If you decide to take it, you watch it carefully, okay? So these are things that you can do to avoid, okay, losing. You want to know the key levels, very important, because professional trade around key levels, okay? Ordinary traders trade the indicators and they make a lot of mistakes. Trade around key levels and you will trade together with the professional. Understand the language of the price. In the uptrend, the price might display higher lows, higher highs, until the price failed to display a new higher high. You see here, as the price was going up from this session, you see, look carefully, yeah? Up, 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 up. See, here you can see it was a bit choppy. There was a resistance, this zone, can you see? All right, now you break above it and start displaying higher low. Okay? Higher lows, higher high. But again, here we can see that there is a resistance here, resistance here, resistance here, resistance here, resistance here. Okay? So you're not going to ignore it. All right? So if you want to be bullish, you don't want to be bullish near the resistance zone because you don't have enough room. You want to try to move away from the resistance zone near a support level, and then you can have room as the price looking for a better resistance before you take it. A lot of traders can make excellent decisions if they try to be a bit more focused. Don't get emotional. If you have a losing trade, just say, what has happened? It's your right to know, okay, what has happened. Something went wrong. Okay, what has happened? Okay, you want to know, all right? The next financial instrument is the Euro USD, talking about, okay, 5 steps that we can use, okay, to avoid, okay, trading mistakes. We are talking about reviewing our past trades, okay, which is very important. This is the Euro USD. I will start again on the hourly chart. These are my line. You see, this is the media line for last Friday. It's the high of last Friday and also the high of last week. This is the median line of last week. This is the low of last Friday. This is the low of last week, you see. So let's see what has happened today, 28. Let's put again a vertical line there. I'm using the hourly chart because it's a very friendly time frame. And you can avoid the market noise if you're on the hourly chart. It's a very, very friendly, okay, time frame. Okay, now, this is today, 28, so we know yesterday night, because it's a forex market, it opens here. All right. So the high of last week is there. You see how the price was trying to, you see? Here was trying to, when New York, just before New York was open today, you see this session, there was some news regarding the economy in the United States, okay? Was bullish news for United States. And boom, 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 the euro tried to retest the high of last week, you see. Either we seek the median line or we seek the high if it's in this session. If it's below the median line, okay, of last Friday, you will seek the low or you will seek the median line. One way or another, okay? It's happening all the time. It's not magic. It's something happening all the time, okay? So last night, in fact, I saw the euro, okay? I have 2 trades now that were successful. What I did, it was not, I trade MACD. I need to be honest here because what I did, I trade MACD. I understand MACD very well. MACD, a clear-cut signal, which I took yesterday night. But I don't like to trade the Asia session. I know the risk, but I know how much it will cost me for that trade. So I was happy with it. And the reward was quite higher to the risk that I was about to take. So I took these 2 trades, all Euro USD. And by the time London was open, I was paid nicely. Okay, 2 trades. I closed them straight away. Why? Because the way I explained, you should watch the video that we call MACD Reloaded. MACD was telling me that the price, okay, on the hourly chart should come near, okay, okay, the simple moving average 30 or 50 should come near. All right. So there was a kind of divergence, not divergence like we know it, okay, but reading the MACD indicator, I have understood that the price should try to come near, okay, simple moving average 30 going to 50 near. So money when I see near, I just take my money and go. But there was some tricky trade for traders today here. And in fact, I had another losing trade here. I will explain to you what I had a losing trade here. I was buying somewhere here today. But the market was not, a lot of traders thought that the euro should go down completely. But it was a wrong decision. Let me explain myself to you. This is what I'm talking about, that traders sometimes can make you lose. Okay, this is what's happened to me today. They can make you lose. You see, when we draw on this hourly chart, okay, this is the trend line that I have here, all right? If we drop, for instance, another line, just a common sense trend line like this, through, you see this section here, just going along it like this, just roughly. It's not the way people usually draw trend line. Just draw it like this, okay? Because, you see, this is the trend line, the normal trend line like this. It's quite away from the movement, you see? It's going like this. I don't like this one. So I draw my line like this. It's what I call common sense line. And I see the price coming like this. So the price went up first, okay? And then it rolled like this, okay? I want the price to come back this session to retest this zone because this is the resistance that caused the price. Pay attention. This resistance here, okay, has caused the price to go down, okay? The market will prefer it to come back and retest that resistance level. That's what the price doing more than 70% of the time. So I was not expecting the euro to continue going down like this. It's not the normal progression of the price. Very often, sometimes you will see that, okay, sometimes you see that you touch it and just roll it down. You know that the higher time frame resistance just roll it down completely. But I was expecting the euro to come again and retest it. And I placed a trade after I came out of my bearish trade. I placed a trade here to buy. And the market was blah, 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 blah. And finally they took me out. Okay, I was not happy about it, and I was sitting down watching the price. There was a situation. I think it was on a 5-minute chart. There was one pattern somewhere. Yeah, it was this section here. You can see this section here. Here, this is the section here. There was this double bottom pattern. The price was about to go up here, all right, and traders force it back down like this. Okay, they force it back down like this. Okay, because they thought that the euro should continue movement to the downside. All right, you can understand what's going to the mind of trader. They sold it again, blah 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 blah. Okay. And finally, re-enter again here, and 2 trades again, and all successful. So 5 trades today, Euro USD, 1 losing trade. It's not too bad. I can't complain about that. So the point I want to make to you, very often, sometimes traders get into trouble. Let's go back to again to the hourly chart. No, this is the daily chart. I'll go back again to the hourly chart. So whenever we see the price coming down from a resistance level, we will prefer the price to go and retest it. Which it came here. What I did, I took my profit straight away. I see around 72 or whatever. I just take my profit straight away because that's what I was expecting to do. I just take my profit straight away, and price went down a bit more. I was expecting it to come up a bit, so it went to 63, and I sold it again. Okay, I sold it again. All right. And so far, I'm in profit. My stop loss at break even. So it's not bad so far, okay? All right. So this is just a low risk trade, but you want to understand what the price is doing. So I understood why I was taken out of the trade somewhere here. A lot of traders want the euro to go down, all right? But it's not. It's the professional don't like that. We want orderly market, break below, retest, turn around. Everybody is happy, and everybody can be rewarded. But movement like this, price went up and you hit and turn around. There are cases where the price can do that, but this is not one of them. So you see, that's why some traders were still selling, late sellers here, why the price returned back up. But look carefully to this trend line here, okay? Watch this one. Suppose you draw it on your chart. So the price you sell it, like I did, you see, it came near this trend line, but I was not paying attention to this trend line. You will take profit, okay? See, people took profit here, went up a bit, come back again, and retest it here, and you'll take it here. Boom. All right? That's not a bad decision. As we can see, drawing our key levels, all the Euro USD has done is rolling near the median of Friday, okay, displayed double bottom, and went back, okay, to retest the high of, okay, last week. Now it found a resistance there and it's rolling it down. See? So that's all we can say about the Euro USD as we are reviewing this one. Okay, this one method, reviewing your trade near, okay, median line, psychological price level, boom. Okay. Next level is this one. If it's rolling it down, we are now below this 3/4 line. We are watching it. Okay, so you will watch this median line. You can perfectly take profit here, and sometimes you may miss a chance, which may prior roll it down and say, oh, George, look at that, I missed. So what? Doesn't matter, okay? You may. Sometimes the price will be nice to you and give you another chance, okay? Sometimes you will not, but okay, it happens, okay? You may just roll it, poo, you say, I miss 100 pips. It doesn't matter, okay? It doesn't matter. The important thing is that you don't lose. All right? So, I mean, I hope you find this video useful. So, we want to review our trade, okay? That's one, okay, steps if you want to avoid mistakes. The next thing that we can do is to have a plan, okay? If you don't have a plan, there is a video on our YouTube channel, www.youtube.com/georgetrio, okay? Trading plan, okay? 1200, okay? All right, there's another trading plan for 0C0. The trading plan for 0C0 is to recoup past losses. The trading plan 1200 is for day trading. So you want to have a plan. Just drawing these line key levels on your chart is a plan. Okay, so you have a plan, you know where you are willing to take your trade. You don't want to force it on the market, but you are keeping your eyes open to see whether the market will offer you, okay, excellent opportunities around these key levels, and also to manage your trade. So the first step is to review our trade. The second step is to have a plan. So if you do not have a plan, you can watch the video on our YouTube channel, Trading Plan 1200, Trading Plan 40, okay, C0. But also drawing these key levels will allow you, it's a kind of a trading plan, okay? All right, drawing your channel and only taking bullish signal, okay? So you want to draw your channel on a higher time frame before switching to a particular lower time frame. So if you are, for instance, busy on the 1 minute chart, some people even on the 10-second time frame, okay, draw your key level from a higher time frame before moving to your lower time frame. You do not make a trading decision on one single time frame. The higher time frame will always dominate the lower time frame. So I do not stop like this. I go to the monthly chart, I go to the yearly chart, I go to the quarterly chart. I know what's happened to the Euro USD, but that's not the point of this video. The third step to avoid trading mistake is to use, okay, stop orders. Okay, let me explain myself to you. Sometimes, for instance, here you see, suppose you were here, okay, the price was here. I can draw a line there, okay. Let's draw a line there. I'm going to color it. Now pay attention carefully. This is good for new traders because this, okay, let's use pink again to please. No, I won't use pink this time because I have another pink line on my chart, which is the median line of the week. I will use which line? Black now, okay? Nice color. So now, in the past, this has cost me a lot of money because I was not doing that. So suppose you want to buy here. The price was here. You want to buy. A lot of new traders will just buy the market price, which means you go, you click buy, and you buy straight away, and your order is filled. This is the market order. You buy the market price. So you go to your account, you click Euro USD, and then you click buy, and then you put whatever you want to put in, and then you buy straight away at the current price. If you want to avoid trading mistake, professional, they don't do that. So the price was here, you see what you want to see, you see the signal you want to buy, they will not buy at the market price. They will put a buy order here. So buy at 13436. Okay? But the price is here now, but you know that you should buy, but you don't want to enter the trade here. You maybe 5 pip above or 10 pip above, and you place here, buy at 13436. This is, okay, the buy order, a stop buy order. And the price, when the price going up, the price reaches your level, your order will be filled. Hopefully your broker will give you excellent price, okay? All right? Hopefully your broker will give you the excellent price, okay? All right? Why is so important to use, okay, the stop orders? Because sometimes, suppose you enter here straight away at market price, and the next thing, the price start rolling it down. You are straight away in a loss, okay? So if you place order here to buy, and you go and do something else, and you come back 2 hours later, you notice that your order was not filled. You say to yourself, great. In fact, the price is going down. So the price went down without you. You were not filled. Your orders were here, okay? So you can use, okay, all right, stop buy orders to buy. Same thing. You want to sell, for instance, here, where my cursor is. You may decide not to buy straight away at the market price, which means you go to your account, click sell straight away, and buy at the current price. You may place orders, say, okay, I'll place orders if it comes to below, okay, this level, buy, sell at 13464. So your order will be here. So if the price does not move down, and instead went up, your order will not be filled. It does not mean that you can't lose with that result. You can never lose if you are applying these stop buy orders. It doesn't mean that you cannot lose, but it can reduce the risk. All right, instead of buying on the market price. Sometimes it can work against you. How? Which means you place order here to sell. Okay, the price will dip down, you get filled, and then run away up. In that case, you lost, okay? Your order were filled, okay, but the price came down first, take you, and then run away. You see very often happens, okay? But you want to use a tiny stop loss, control your risk, okay? So you do not gamble too much, okay? So use stop buy or stop sell orders, okay, to enter the market if you want to. You don't have to. But sometimes this can help you to avoid, especially if you have a doubt, you are not sure, or the trade is tricky. If the trade is tricky, you want to use a tiny stop loss. Some people use option. It's the same risk. You are paying premium. It's the same thing. Some people use all sort of binary option. It's another tool traders can use, binary option, to come into the market. I trade spread betting directly, okay? If I lose straight away. I know what I'm taking straight away. All right, so first step, okay, review all your trade, winning and losing trade, why the trade was successful, why you make sometimes you have a winning trade, you want to know, sometimes you may find out that there were other elements that has supported your trade. So you discover, okay, or you can create your own trading system by keeping your eyes wide open, try to understand why the price is behaving in a certain way. All right, I know some traders that are doing that. Okay, all right. So that's so the second step is to have a trading plan, which I explained to you already, and the third one is to use stop orders. The fourth one, you may not heard about it before, but I use it myself, which I prefer to share with you because you are my friend. All right. So it's about split trade. What do I mean by split trade? S-P-L-I-T, split trades. All right. Because I trade, okay, spread betting, okay, if, for instance, all right, you want to place a bet here for £5 per, let's use dollar, okay, $5 per point, okay, so each time the price move 1 pip, you get £5, 10 pip, that's $50, okay, 100 pip, that's $500 if you bet $5 per point, okay. Instead of placing a trade $5 per point, I may place 5 trades. That's what I call split trades. What I'm doing, I'm not saying that this is the best. You may laugh about it. Please, you can comment below it, okay? But all I'm saying to you, I use this strategy because I believe that, okay, I watch sometime, okay, those little ants, those bees, how together these are very small and they can surround something, okay, very tiny small. I send them one by one, okay, instead of sending £5 per point, I will send them £1 per point, another £1 per point, £1 per point, okay. It doesn't matter the minimum that you're supposed to play, you can play them instead of putting all the £10 or $10 per point or $50 per point. You may split it, $10 per point, $10 per point, make it 5 trades. What I will do, ladies and gentlemen, pay attention. Suppose I want to buy here, all right? So I'll buy, okay? I'll buy, the price going up, okay. I'm in a profit. I'm watching the price. Price come to this resistance level, I'm watching it, okay? Because I'm on the hourly chart, I'm not going to enter here. I may switch to maybe my favorite time frame, 3-minute time frame, to see what's going on there. Price give me another bullish okay, pattern above a resistance level. I'll place my second trade. All right, it start rolling a bit up, I'll place my third one, and so on and so on. So I have all my trade at different levels. Some may say it's risky, but because if I place, for instance, $5 per trade, and the trade straight away went against me, 10 points, that $50 gone straight away. All right, if I place $5 per point, if it goes out 10 points against me, that $50 straight away. But if I place $1 per point and it went down 10 points against me, that's $10. Okay, so I'm coming in step by step in the market. Some may say, well, George, you're losing some pip. I don't give it. I mean, I don't allow. Are we allowed to use that word? Okay. it doesn't bother me, okay? It doesn't bother me. The most important thing for me is that I'm adding to my account and I'm not losing too much, okay? So this is about a split trade. The same thing I want to sell. For instance, if you want to sell, because why am I saying this? Very important. A lot of traders will come into the market, especially new traders, and their account will be wiped out very fast. People come in with $10,000, wiped straight away, and they hold their head and thinking, what has happened to me? And they lost everything. Or somebody, depending, maybe they have $20,000 and they lost it big time. And they wondering, how come the market can do this to me? I've done it myself where I know I lost some money, and I know. But I didn't lose it putting big bets, because I think the market is sometimes like a gentle, okay? You have to deal with the market like a gentleman, okay? Step by step. Sometimes you enter a trade, the market will take you out, and then you watch it. But in fact, the signal did not change. And then you come in again, it may take you out again. But in that case, you have to come in small, small, small. So instead of coming in with a 30 pips stop loss, you may come in with 10 pips steadily. 10 pips. The market will take you out, another 10 pips. Sell. You are doing exactly the same thing. You sell, stop loss 10 pips or 15 pips, they take you out. You say, what's going on? And then you enter again, 15 pips, they take you out. Nothing has changed. You verify everything. You have to sell. You come buy. You sell again, and this time the market will accept it. You are coming to the market gentle. You don't force it. But if, for instance, you come in and say, 50 pounds, okay, 50 pounds per point, because today I want to make $5,000 in the first hour straight away, and the market takes you out, working against you, you lost. You lost big. But the question I want to ask you, whenever you want to enter a trade, you want to know how much risk you want to take and how you want to come into the market. So, for instance, I want to sell here. It depends on the time of the day, whether the market has been volatile or there are some important news coming in the market. So, depending on the environment, this is very important, the environment, okay? And the setups is irreliable. Even if it's reliable, you have to go gently with the market, okay? And you may go step by step, which means split the trade. Don't go big time, $100 per point. And if it works against you, okay, you all right? So you may go $5, $5, $5, $5, or $10, $10, $10, okay? Depending on what you want to do. I'm not saying that this is the best way to do it, but this is something myself I do sometimes, okay? Not always, but sometimes I do that. So you may see me have like a Euro USD open for 5 trades, okay, splits. All right, and I will be taking profit gradually each of them. I don't like to have many trades open for a long period of time, especially in the forest when the market is going up and down. I don't do that, and I'm taking profit consistently. That's my strategy. That's my trade. If I'm day trading, I like to take money because I'm sitting, I'm trading. I want to get paid. All right, I want to get paid. And that's why if traders are wasting our time. It's frustrating because you want to get paid, okay? You want to get paid consistently, all right? The next step, talking about how to avoid trading mistake, we must use, okay, market patterns. This is very, very, very important. All right, traders that are TST traders that are following us on YouTube, know that I talk about this 100 times. So apology for these traders, but for those who are new to us, I need to say it again. The market pattern is not the price pattern. Double top, double bottom, inverted head and shoulder pattern, round bottom, V pattern, all these, they are price pattern. The market pattern, there are 3 market patterns: the rising channel, the declining channel, and the horizontal channel. We want to give priority to the market pattern. So you can, for instance, on the hourly chart, don't look at the double top, double bottom. Look at the market pattern. You are likely to make better decisions. Some traders may say to me, Joe, that's completely wrong. But you see here, what the price was doing, it was consolidating. You see here, consolidation. This is a market pattern. It's in horizontal mode. If you notice the market pattern, you are likely to make excellent decisions. Here, the consolidation pattern was violated. Price ran away. So people will say on this hourly chart that there is a breakout of this consolidation session. So they will say, break above, the consolidation session, they will be expecting it to roll it back it on top of it. If it can come right here, at least this level, you see this level here, they will say, okay, to retest. They will be expecting it. They can't force it. As you can see here, he rolled it down and now he went up to retest it here before. It's rolling down a bit by bit now. All right. So these are the 5 steps that we can use, okay, if we want, okay, to avoid trading mistakes. Why am I saying this, okay? Why am I saying this? Because traders that purchase TSTW trading tools, okay, it's very important that do not think that, okay, I'm saying this for fun. It's your right. If you see something, okay, traders, some traders are doing it. I'm very proud of these traders, but I invite traders to do that. George, this is what has happened. What do you think? Okay, we look at it. Maybe we will learn something together. Okay, maybe we will share it with traders. Maybe we'll post a video on YouTube. All right, and other trader will learn something from it. It's very important that we share the knowledge. Okay, and the more traders understand, okay, the language of the price, the more money yourself you will make. All right, because other traders can make you lose, as I explained to you today. All right, so this is the USD yen, which I call the crazy currency pair. All right, now if we draw our lines, you can see here, this is, I know this level, this is the high of last week, which is somewhere here. I don't want to remove, okay, this line. I have a reason for it. Let's go to the daily chart and I'll tell you quickly why I don't want to remove this line on my chart. We posted a video on our YouTube channel, our second YouTube channel, www.youtube.com/24 Elliott Waves, our second YouTube channel. This is the video we title here Practical Advanced Trading Tips, which are posted, okay, this weekend. But the video, in fact, was recorded around the 21st or God knows when, not 20, either 21st or 22nd, 23rd, somewhere there. I recorded this video and I posted this weekend, okay. And I'm leaving the, you can check our second YouTube channel. It's about Elliott Wave, by the way. And I was explaining to traders how they can use the first Elliott Wave to forecast the market. So it's there for you to check it. 24 Elliott Wave, okay, www.youtube.com, 24 Elliott Wave, /24 Elliott Wave. And I was here when I was recording the video, but you can see that the price went above, okay, this level. It was during the week, okay, and the price went above this level. Okay, somewhere we were there that time, okay. Okay, now, the point I want to make, for this crazy currency pair, I explained to you why I don't want to remove this line, because there's a second part of the video I'm going to post again, all right. Let's go to the weekly chart, and let's see what has happened for this currency pair. This is last week candle, so as I explained to traders, we will draw, okay. Moment, please. Okay. We will draw the low of last week. I'll color it into blue. All right. And we will also okay. And we also draw the high, okay, of last week. And we will draw the median line, which is roughly, okay, if you accept it, somewhere here, which I always color into pink, so I know straight away this is for the weekly. And then we go to last Friday on the daily chart. We're looking for last Friday. This is the candle for last Friday. The high is almost equal to the high of last week, and the low is somewhere here. and the low which I'm going to color into turquoise. This is to detect the key levels, and also now the media line of okay, last Friday. Moment please. All right, traders, okay, and the media line of, thank you for your patience, and the media line of last Friday, which is right here. All right, so now let's go to the hourly chart, for instance. Okay, very friendly time frame. Waiting for my okay, it's here. So this is today. Again, I'm going to put a vertical line down, and we want to review the trade of today for the crazy currency pair. Crazy currency pair, the dollar yen currency pair. And I'm going to color the vertical in blue. That's today, you see here. This was the Asian session, because this is a currency, the Asia session, right here. What has happened in the Asia session? You can see that the price went to retest the high of last week. Very interesting thing. Look at this. Look carefully. Look carefully. This is the Asia session here. Okay, so you will do this and try to understand what has happened. Sometimes you can miss it, but later you see it. So that's why it's so important to keep your eyes wide open. So you see, when the Asia session was open, it went up, okay, above, okay, the high of last week. Yes. So you will say to yourself, it's going up, okay, because it's going above the previous high. It's displaying a new high. So when we see a new high, we will say to the price, give us the new higher low. All right, that's what we want. So the price went above. Look at this, very interesting. Look at this. Look at this. It went above the high, yeah, but was rejected quickly. Okay, crashed back down. But whenever I see the price doing this, why the price has to go above it and then come back down? Because this is a bullish zone. So normally trader place orders here to load it, to stop it going back below it. But okay, all right. So it's coming back down. If it did below the high again, we will say is to test, okay, whether there are still sellers here. But if, for instance, it went above and it came back and did below it a bit, okay, that's not too bad. Did below a bit, 10 pip, 15 pip, and then return back above, it will say very interesting. Now give us the first higher low above the previous high, which it didn't give us. There was no higher low above the previous high. So it's telling us that it's not good. You see, but now once the price went down, look, it was coming, we say, okay, it's going to go above it and give us the first higher low. Somebody may buy here. Somebody may say, okay, this is a low, a higher low. It's not bad decision. It's not bad decision, but I'm not buying there. So we will be watching it. Look, it came, couldn't go above it. Look, what's this? Sell. Break below, retest, turn around. You just roll it down, okay? So you're rolling it down, you'll be watching the median line. It did below the median line here. Look, this candle on the hourly chart. It did below it here. Nicely. Phew. All right? But then it came out again. So we will say, okay, give us the first higher low again. It fell again. That's where we are now. If you give us the first higher low here, we'll say, good. We'll take it up. Here again, crash it back down. Look at this tail. This, you see the shadow here. Boom, down. It came back again. People sold it again. Came back again. People sold it again. But there's a support here. The bulls are buying here. I'm not buying anything. I mean, people want to buy, they can buy, but I don't want to buy it. So it's up to them, okay? I'm not saying that the price cannot go up and you just sell because I said so, but I'm giving priority to sell signal here, okay? All right, so this is what has happened here. Another trader that is paying attention to the market patterns. So in this case, all right, I want to draw lines. So there's one line drawing here. Joining this point and this point. Okay, that's my blue trend line. Don't be afraid to draw it, even if it's useless. Okay, it's here. You will see sometimes you come and touch it, and then you see. So we want to draw it. Okay. Now the price went straight up, so I would say common sense trend line. That's why you see my common sense trend line here, just along the price like this. Okay, the price was in a channel. Moment please. So this is just something you can do yourself every day. Was in a rising channel. You see, and the price was out of the bearish channel or out of the bullish channel before the Asia session. So during the Asia session, the price just went like this and retest the channel. That's what it did. It came out, break below, retest. Good place to sell it. All right. If you not just to sell, but if you are selling just to sell, like old-fashioned traders, okay, manage the risk. Use your stop loss carefully. But it's better to wait for signal. Okay. So now, so you see here, so break below, retest the channel. So if you were, as soon as I see out of the channel like this, I'm not interested to buy anything. Okay, because the bullish channel is kaput. All right, so we will prefer it to go back above, okay, this level and to start giving us higher lows. So what I will say to traders now is, I will say, if I see something like this, I'll say, okay, priority to sell signal. I may draw a line, just one here, to make it parallel to the first one that I draw. So the first one, this point and this point, I draw my line. Let's use red this time. Okay. Is it confusion? Okay. Let's change it. I'm running out of option. Let's use green again. Okay. Let's color it green. Okay. Let's make it big and then you can see it. So it came out of the bullish channel. That's what I say to you. Use market pattern. That's what allow you to avoid trading mistakes. Out of the channel. Now we have a new channel in place. You see? So, like a crab, catch a combo, all right, American food. So, like a crab, the price will be going like this. We'll see, okay? So, if I want to sell, I will be looking there, okay? But this is the ultimate resistance level, all right? So, we are taking it step by step, okay? I'm not saying that the price will definitely go down. If it's going down, we'll know. How do we know? It will display lower lows, lower high. If we stop doing that, we know that that bearish momentum is weakening. It does not matter if we see a bearish cycle and the price not displaying lower lows, lower high, we will put a question mark on it. Doesn't matter where we are. That's the language of the price. So we are watching it, okay? So here you see, so it's now in a kind of, there's a kind of a support here in this session. Some traders are buying. We can't discount it, you see. All right, so the first step, okay, so to summarize everything, how, okay, 5 steps to avoid trading mistakes. The first step, review all your trade, losing trade, winning trade, review them. This will allow you to avoid repeating the same mistake over and over, and also to understand the price and to learn new things, very important, okay? So review them. Do not get too emotional if you have a losing trade or winning trade. The end of the day, okay, check it. Next day, look at it. If you're a TST trader, just send me the chart, okay? Send me all the chart. Usually trader will send me, okay, 3 or 4 charts about it. I trade the stock that are listed on the, okay, S&P 500, NASDAQ 100, Dow 30, I have access to this data. I have access to Forex data. I have access to some of UK stocks. Okay, so if you trade this kind of stock, okay, don't be ashamed. I mean, just sign in. Okay, the second step, have a plan. Okay, you can check our video about the trading plan 1200, trading plan 4060. Drawing key level is also a trading plan. Okay, so have a plan before you come into the market. The third step is use, okay, stop buy, stop sell orders. Okay, you can use that, okay, instead of buying at the market price. The fourth step, which is my own trading style, is about split trades. Okay, splitting your trade instead of taking one lot in one big lump sum. You want to split them to minimize the risk. The idea is to control the risk, so you are not jumping on the market, so to speak. I will say, today you have to pay me £100,000. Any market will just shake you off. Market does not like that. You have to treat the market like something soft or fragile, gently. I think the market like that. Even sometimes the market will take you out, as I explained to you, you come gently. You don't try to rush into it, and sometimes you just go away. Like today, I took one trade after I have a losing trade. The stop loss was like only 11 pips, and it worked perfectly. And these are beautiful trades. So when I look at that, I say, gorgeous. If I can take that sort of trade every day, when I have this small, tiny, okay, stop loss, and it worked perfectly. Okay, so these are the things that's about split trade. The fifth step is to use the market patterns. Give priority to market pattern instead of the price pattern. I hope you have enjoyed this video, that you will put into use, okay, to make excellent decisions and to avoid trading mistake. If you want to know more about trading mistake, you need to go to www.24a.waves.com. Click on trading mistakes. Until the next time, enjoy yourself and be very happy. We are the TSTW S008 traders.